Asian markets were largely muted on Tuesday, tracking a retreat in New York as anticipation builds ahead of major earnings reports and a Federal Reserve policy meeting. Hong Kong, Tokyo, and Shanghai were flat, while Sydney lost 0.2%. But Seoul gained 0.9% as South Korean tech giant Samsung announced a record profit for the July to September period, its best for any quarter, and said it would double its dividends next year. The world's biggest memory chip and smartphone maker has faced multiple challenges since last year, including a humiliating recall of its flagship Galaxy Note 7 handsets and a corruption scandal that engulfed its de facto leader. But its profits and share price have rocketed this year, thanks to strong demand for its memory chips and revived smartphone sales following the rollout of the new generation Galaxy Note 8. Its quarterly net profits soared to 11.2 trillion won, $10.0 billion, a jump of 148% on the same period a year ago, and Samsung shares rose 1.92% on Tuesday. Samsung Electronics is the key subsidiary of the sprawling Samsung Group, whose heir Lee Jae-yong was found guilty in August of bribery, perjury, and other charges stemming from payments to the secret confidant of ousted President Park Geun-hye. Tokyo shares clawed back earlier losses to end flat after Japan's central bank announced it would maintain its 2.0% inflation target, seen as crucial in a long battle against deflation that is blamed for holding back the once booming economy. A stronger yen weighed on automakers, with Toyota losing 1.2% and Honda falling 0.5%. While SoftBank plunged on reports that talks over a planned telecoms mega-merger had been cancelled. SoftBank fell 4.6%, after leading business daily Nikkei reported that merger talks between its U.S. subsidiary Sprint and fellow wireless operator T-Mobile, controlled by Deutsche Telekom, had been scrapped. In other downbeat news, Chinese manufacturing growth slowed in October after 2 consecutive months of acceleration, according to official data released Tuesday, due to weak demand and a drop in production due to public holidays and restrictions ahead of a key Communist Party meeting. Big week for U.S. Investors are braced for a heavy week in the U.S., with President Donald Trump expected to say whether he will replace Federal Reserve Chief Janet Yellen, with the announcement likely by Friday before he embarks on an Asia tour. Traders are also keeping a close eye on the release of the October jobs report on Friday. News of the first indictments over the FBI investigation into Russia's interference in the 2016 U.S. presidential election have also sparked caution among investors. The scope of Special Prosecutor Robert Mueller's investigation will likely widen. But at this stage, we have no idea if there's a smoking gun or it's all a tempest in a teapot, said Stephen Innes, head of Asia Pacific Trading at OANDA. There are fears the probe could potentially derail Trump's tax cut plans, which have boosted investor optimism. a guilty plea by George Papadopoulos, a foreign policy advisor on Trump's campaign, is seen as the sharpest evidence yet of possible collusion between the campaign and Russia.